I wasn't. Right now it's recording.
Okay.
So, okay. The bank reconciliation process, I'm sure you understand it. Okay, let me just put something so that I also discuss while this I'm typing.
Okay.
All right. So because in the issue we don't have like a bank statement but I think I'll try to show you how it works. We just
Okay.
probably just close this. The new issue. All right. So we're saying the bank rec, what is happening every day? We are capturing our cash book transactions, right? So you're capturing your cash book transactions, which we said you do them via transactions, general ledger, then cash book batches. So you are capturing those transactions in the respective bank account, right? So you're in the respective bank account, you're capturing the transactions, then you are posting, which means at the end of the day or whatever period, you have reports. You have got cash book reports. So you can actually view the cash book and see those transactions. But you also want to reconcile. So basically, what you are reconciling is what you have on your system against what the bank has. So the bank will give you a statement, right? They'll just give you a bank statement. Then you are comparing that bank statement against your cash book. That's the bank. That's the bank reconciliation process. So what happens now is when you get your bank statement, the first thing that we have to do is you are viewing your cash book. Let's view. I'm sure we should be able to view one. Let me see. We posted some transactions, I believe. Let's see if I'm able to view. Because what we are doing now is we are holding a bank statement. We have our cash book, and we are comparing the two. This is just a physical comparison. We are actually comparing, ticking transaction by transaction. Okay, this transaction is on my bank statement. Is it in my cash book? This transaction is on my bank statement. Is it on my cash book? All right. So this is a physical checkup. All right, just hold on. Come in. Lunisa. Mnashe. Yes, Madi. Ari kude basi ngauye pafoni nditaure. Mpe foni ndota nditaure naye. Hello. Yes, iwo ndakanzonzi kudhakwa ka. Saka tinotombomira ngochi. I see that's not the issue. That's not the issue. Let's not discuss that. Issue ingoripo ndekuti wanga wakadhakwa and you're making noise and so on. Saka ngatidai so. You have to come kuno. And umbomira kuenda epapa. Uye kuno kwaRarare then utositaura nyaya yako kuno. Nditaure naMnashe. Hello Mnashe. Hello Mnashe. Sorry for that. Sorry for that. So I was saying this will be our bank statement. Like in this case, this bank statement is, does it show which bank statement it is? It's just saying cash book. Do I see the bank statement? NMB should be, okay. Of course, we've got cash book. CRB is, okay, we have to check which one is that. This one should be CBZ, if I'm correct. Then this one should be NMB. All right, it's just showing. Okay, let me rerun this because we're supposed to see. We want to see. All right, account name, sort by account name, sort by account print. Wow. So probably you have to select here. You have to select here, and pick the account that you want to view. So let me just see the accounts which I have there on the report. All right. So the bank rec is not complicated as long as your transactions are okay. Right, so CBZ. So the first one which we were viewing, I think, is CBZ. Okay, that's fine. So we are viewing the cash book. Right. Okay, we can preview this. Let me preview. So you're making a comparison. We're making a comparison of your cash book. So this is our cash book, and you are taking your bank statement. Then you are going transaction by transaction, and you tick if this transaction is in your cash book, like this one, you tick it. Is it on your bank statement? Then you also tick. Right. The end result of that exercise is you are going to realize some transactions which are on your bank statement, but not in your cash book. In other words, you have transactions on your bank statement, but which are not here. You see, like bank charges, probably a customer made a direct deposit and they didn't communicate. Probably have set up some direct debits, like some subscriptions and so on. Right. So you have transactions on the bank statement which are not on the cash book. Now, what you have to do now is to come back to your cash book. So you have to come back to the cash book, process those transactions which are on the bank statement, but not in the cash book. Right. So what it means is all your transactions on the bank statement will be in your cash book. This is what it means. Now, the reconciliation process when you are doing it now is basically to reconcile those items which are in your cash book but not on the bank statement, because you can't change the bank statement. It's not yours. Okay, it's yours, yes, in the sense that they are given by the bank, but it's maintained by the bank. So you don't have direct access to change it. So when you are running the bank reconciliation, basically what you are simply doing is you are now coming, selecting an account. I wanted to select CBZ Nostro. So you put the bank balance there, whatever balance is there. If there is a reference, you also put a reference. Then you come and select either reconcile up to month, then you select the month, or you want probably to select up to a particular date, right? So whichever way says up to month. So you can't select a particular date. So you select the month that you want to reconcile. Then once you do that, what it does now is you can view, then it will bring the transactions. Okay, probably let's say, okay, well, look, I then clicked on view, then it logged up this. Oh, okay, let me see if I'm able to start. I want to do December, because December has got transactions. I want to see if it allows me to open it again. So we are saying general ledger reconciliation. All right. Okay. So probably let's do December. I believe, is it December or November that we captured? I'm not sure now. All right. Then let's view. Right. So it finds, yeah. Now, what it does now, this is your cash book. You just need to understand this. So what you are doing now is you are again running the ticking process, but you are now ticking from the system. So you are looking at your cash book, which is these transactions. You are looking at these transactions and saying additional capital injected by shareholders of 50,000. Is it on my bank statement? Right, yes. Is it in my cash book? Yes. Then if it is, then you're going to put a tick like that. Right. If it is not, then it means you're not going to put a tick. You go to the next one, finance charges for November 2025. Is it on the bank statement? Yes. Is it in my cash book? Yes. Then you put a tick. So this is how you do the bank reconciliation. At the end of the day, you'll be able to do your bank rec. and print reports. So you can now print or save and close to complete your bank reconciliation. Do not reconcile. Do not do an automatic statement reconciliation. Follow the steps which I said. We are saying first thing is you are viewing your cash book report, right? So you are viewing your cash book report first, right? Then you are comparing that cash book report to your bank statement because you've got a bank statement. You are then identifying transactions which are on the bank statement, but not in your cash book. Then you are going to update your cash book via transactions, general ledger, cash book batches, the respective cash book, by the transactions which are on the bank statement, but not in the cash book. After you are done, then that's when you come and do your transactions, general ledger, bank reconciliation. You are now again comparing the updated cash book against the bank statement, ticking identical transactions in the bank reconciliation. Then you will be left with the transactions which are in your bank, in your cash book, but not on the bank statement. Those are the reconciling. It could be unpresented checks, it could be uncleared deposits, and so forth. Right? Is this clear? Is this something that you can do? Are you there?
Yeah.
All right. So basically, that's our bank reconciliation. Probably later on we'll try to probably do some transactions with it. Then yeah, I think we've covered all the necessary transactions that you are supposed to know, right? I would want to at the point of sale, I'd said, okay, if you are using point of sale and you're using tills, yeah, that's when you actually need to set it up first if you were to use point of sale. So in terms of devices, those come with the system. So the devices, if you have gone into OK or any supermarket, these are the devices that you are just using to do your point of sale. So you have to configure them and link them to Evolution. So by default, they are provided, right? The same goes for tender types. Tender types are how customers pay. Customers pay by cash, customers pay by check. In other countries, credit cards or debit cards. All right. So you could put debit cards there. Then, of course, if there is any other. So these are just tender types. You could add, like in our case, mostly we use like debit cards. Mostly, we don't like use credit cards. So you could just have debit cards as an addition. So these are the ways customers do pay, right? Then, what does it require? It requires, right, invoice transaction, that, then the credit note transaction, CN. So you're just selecting that. So this is how basically you are adding it in the type. Then, all right, you've got tills. So these are your tills. When you go into OK, you've got how many tills? 1, 2, 3, 4, 5. You should have added them to Evolution so that you are able to do the till. So by default, T1 is provided. You can add T2. So you're just putting a T and saying T2. You could describe it whichever way you want. Then you just pick these drawers, because these are supposed to be networked. That's why you have to pick. Now, your printer, you determine which one you are using. If you're using physical devices for fiscalization, then you pick. Then you just link with the warehouse. That is, if you're using what? Point of sale. Then the transaction types, you don't have to do anything. They are provided. These are the transactions which a person at the point of sale is doing. Mostly they are just operating their tills, but you also have got shortages. You may take money from the till. It happens. Not of course in our case Zimbabwe, but in individual owned shops, you may have the boss coming and taking. Even you may have float for change, till excess. If the cashier is got the excess, then the banking. So these transaction types, they come with the system. Once you create your company file, they are provided. Then the defaults basically has to do with the receipt numbering and all these. The same goes for sales and returns. It has to do with the numbering and the transaction codes. Also, these transaction codes, you just leave them as they are. So the defaults, normally you don't touch them. The same goes with the till slip layout. This one, it just has to be designed. You have just to design it and how you want till slip to come up. So you do the setup here. Right. Normally, this one, we say just engage somebody who can do it with speed and who knows how to do it. So for transacting, your two people will be just using the point of sale. And when they're selling, they just click on sell. Then you select the till. So when they log in, because these people, when you create them as agents, you link them to a till. When you create the user, if this is a person who's going to be using the till point, right? When you create the user, you then come and link them to a till on under retail and so you select a default till if they are using a particular default till. If they are not using, it's still okay. You can leave it blank. They can select when they log in. So when they start their day, when they log in, they start with a cell. They select the till they are working on. If it is till 2, then they just say till 2. It will give them a window on which they do the selling. So it's more or less like your invoice window. So they're just selecting the customer and they are processing the sale, right? Then the receipt is printed, right? If there is a return, normally probably a customer is bought, but for some reasons, customers may say, I've realized I don't want this. They just do the return. Normally the return is done by the supervisor, like your transaction void, right? So they just do that to void the transaction. Then you have got other two transactions, like as I said, you may have shortages. So you just select the two transaction there. If it is float, meaning change, if it is banking, if it is money for petty cash taken, if it is shortage, if it is excess, and so on. So you select the transaction, you put a narration there, then you put the amount, then you process and close. It will post it to the respective accounts, just as we saw when we looked at the defaults. Because your defaults is what handles your transaction. So you've got these defaults. So your two transactions, they are already mapped. Now, when you select a transaction like what we saw here, when you come and say point of sale, transactions. When you process a transaction, it's already mapped to the defaults. So it will know the account to post to and everything else. So yeah. So your point of sale, more or less like your retail, right? It's more or less like your retail. Of course, you can see details and everything. Yeah. So basically, I think in terms of for transacting, let me just check again. Because we want you to know how to do your journals. We've shown you how to do that. Customer invoicing, supplier invoicing, how to receive inventory, and so forth. So yeah, generally, I think you are set. Maybe under inventory, we may want to talk about stock count, inventory count. Yes, inventory count. Normally, you are doing it in an organization that is selling inventory. They've got physical stocks. So from time to time, we may want to check the stock, the physical stock against the stock that is in the system, right? So you actually do a physical count, you print stock sheets and everything. But when you're using evolution, you just say use evolution to do that, to manage that whole process. So for you to do that, you're just coming to transactions, then you're coming to inventory, then you're coming to inventory count. So when you do that, you can add an inventory count like this. So you have decided that today you are going to have an inventory count. So you edit. It will give a reference. It will give a description. Then if you also want to put a reference number there, you can. Then you can set up these options, delete inventory count after completion. This is good. Default printer if you want to set printer. Right. Quantity on hand, let's talk in progress and so forth. Then you can also come here and select the type of products that you're going to count, inventory types. Then from, you can also select from which product up to which product. Normally, I'm just selecting all the products. The same goes with the groups. You are also selecting all, or you can ignore inactive items. If you don't want to ignore, you can just remove the tick there. Then you can even select a warehouse in case you are accounting for a particular warehouse. Instead of selecting all warehouses like this, you could select probably one warehouse. Could be master or anything. So you select one warehouse. Right. For myself, I've got branches. So once you have got that, just say, okay. So if you wanted also to include bin locations, we would have ticked there under warehouses. We would have ticked and included bin locations so that when the stock sheets are printed, they also include bin locations. It helps when you're accounting if you are using bin locations in your stock control. So once you have done that, it then creates an inventory count. Let's just wait for it to do that. All right. It's taking a bit of time. All right. Let's just see. So your inventory count is not a complicated process. You see, it's not a complicated process. It's just a process which allows you to manage your count, your inventory count using evolution. You do the physical count, then from that physical count, you input the counted quantities. The system will automatically compare the counted quantities against what is already in stock. Then it will print what you term a variance. You then verify that variance with the team which is managing, who are managing the stocks, right? If there is no variance, that's excellent. But if there is a variance, then you do the comparison. It's taking forever to load up. Oh, it gets loaded up. So this is the stock count. Now, this is stock count. You then you have to do a physical stock count, right? You could, let's probably edit quantities. Let me see there. So we have got that, right? This one will show the system quantity, count it, edit, right? I want to print, right? Does it allow me to print stock sheets from here? All right. Right. Doesn't, right? Copy, input, captured, all right, print. Print this. Print is, does it allow me to print counted items, print uncounted items, print ignore items, no variance, right? Then want to do this. Just want to see if it allows us to print the stock sheet, because you'd want to print the stock sheet from the system. So let's see, right? Okay. All right, this report is not the one that we want. Let's close that. And captured, complete, then to count report. Let's print that. Let's preview. Pause for you to, yes, so this is what we want. So in this case, I printed with the system quantities. But normally, okay, I'm going to rerun. It doesn't have to print with the system quantities because this is what people are going to use to do the actual count. So they have to do the actual count. So we could just come here and say, do not include quantity on hand. Then just preview again. So these are the stock sheets which you give to to the people who are going to count. So they take this, then they do the count. They put the quantities there, 1, 2, 5, depending on the quantities which are there. Now, when they return those stock sheets, you then come, you can either input, right? If you input what it does now, you don't see, like, it will just pick the item. Then you are just supposed to input like set to a particular number, right? Or you've got the option of editing, like editing quantities. I prefer using this one because what it does now, it will show you like probably the system quantity. Then you are just supposed to put the counted quantity there. So by doing so, it shows you a variance. There is a variance. So which means if my system had quantities there, it was going to compare against discounted, then it could actually show if there is, my system has got 0. So because of that, once I put quantities there, it means it's going to show variance. But in the real world, you will be having system quantities because you received and sold these items. So basically, this is how you do it. Right? So you just input that, right? So you input that. So once you are done, just save and close. Item laptop, 10 serial numbers are required. So item laptop, I'm not going to bother. I think we set it up as, all right. So it says we need 10 serial numbers. So we should have had 10 serial numbers for item laptop. We don't have that. So for item laptop, I'm going to put 0. Is that so? Then you put 0 there. Right. Then write 0 again there. Okay. Then I can put 10 there. Right. Put 20 there. Put 14 there. Then again save and close. Let me try to save and close. So once I have done that, if I wanted to complete my store count, I could just come. That is, so you are looking at this and you are saying, hey guys, look, we have got a variance of this count. You are doing your store count. You can print or you can show them, we've got this variance, right? Are we satisfied? Are we saying this is the correct position? Once everybody agrees, then you just come and complete the store count, right? So right, I've got an open batch, that's why it's giving me that warning. So you're about to complete the inventory procedure. This will post inventory adjustments for invariances. Please ensure that you have got, you printed a variance report for 9 items. So if you want it, you will just print the variance report. This variance report has to be agreed upon with everybody who is involved. The person in charge of the stocks and those who are counting, you have to agree on this variance report and sign on it. Once you've agreed, you then say, okay, to complete. Are you sure you want to complete? Yes. Then this is how you carry out your store count. Errors were found. If you wanted to view the log, view that. So the stocks have been updated and it is cleared. So yeah. Then is there anything else? I think the other thing, credit note, I think we spoke about the return to supplier is just like your credit note, but you are now returning to supplier. You bought goods from a supplier. You are not happy with certain goods. I think you are familiar with this. All right. So you're just selecting the supplier, selecting the items, then you are processing. So this one is straightforward. Again, let's see now. Then we've got warehouse IBT issue and the warehouse IBT request. So, okay, this one is inter-branch transfer of trading stocks. Inter-branch transfer of trading stocks. It gave me an error. Let me see the error which it gave me. So that we just run through. All right, so I've got a requisition there. All right, so I have to switch on inter-branch transfers from maintenance. So I'm coming back here. I'm going inventory, then I'm going warehouses, then no, I'm going inventory, then I'm going warehouse defaults, That's where I want. Then I have to activate interbranch. So I have to tick there and then just click on right. Oh, this is done automatically. It's just linking those goods in transit. It's linking variance. Then once that's done, just click on that. So when a branch, you have got a number of branches. If a branch is once stop their own evolution, they just make a requisition. So when they make a requisition, it brings up this. Then just put a description, request for it's boom, yes, right. So you can put the references and everything. Then from, you now have to select. So it could be from entire branch to, okay, this is entire branch, sorry. Then from which warehouse to this warehouse to then to this warehouse. Then you pick the items which are being transferred there, right? Quantity required, then you are putting the reference if it is there, right? So again, if there was a barcode, you could put a barcode there. Then you say request. So this is a request. If it doesn't respond, you just say save, right? Then you can validate if you want it. So this stock item is found in branch Mutare. Let me change here instead of Mutare, just put O. Where is my O? Right. 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 Let me try to validate. Right now it's okay. Then I can process. You have requested stock from head office. Are you sure you want to proceed? Then you say yes. So you notify, do you want to save? Then yes. You sure you wish to post? Yes. So the requisition has been done. Do you wish to print the request note? Yes, we would want to print this because whoever is going to take the stocks would have to present a request, right? This is a request from this shop for these goods. So this will be the request. Now, when the request is sent, so this is your requisition, then this one will issue the stocks. So you put a description there, then it's from Harare to Kagoi, right? Because you've got your GIT there. Then here you're putting in, right? You're putting in your description there, paste, right? So this is meant to manage interbranch transfers, right? All right, so we have got this 10, right? Then the process, right? Let us found no quantity has been entered, okay? So we have to enter the quantity, valuable, quantity issued, say 10, then we're supposed to put a reference as well. So we're just saying boom, paste. You would actually have to put the correct reference there. Then let's try to process again. Say yes. Right. Do you want to print slip? If you want, you could say yes. If you don't want, then you could just say no. So when the branch receives, so this one is issued, then this one is to receive. So it does a warehouse IBT inter-branch transfer. So it will pick a number there. There has to be a number, you see, like this boom paste. Because we did, so it will just populate, right? It will populate. You don't have to do anything unless if you want to add the reference and all that. And then once you have done that, you then want to process. Like errors were found, outstanding quantity is 0. So outstanding quantity has to be 0. Yes, that's what we want. Why is it? It's complaining that is 0. Outstanding quantity is not 0. Okay, it's not 0. Outstanding quantity is supposed to be 0. Quantity received 10. So I'm supposed to put our quantity received 10 there, and that one becomes 0. We can validate and once. Right. So basically, I think for the remaining, this one you are using this in an environment where you've got a number of branches and you are transferring stocks between these branches. So basically, I think we've covered all the areas that are material in terms of using information. What I just want to do probably, I want to do with you what I term take on balances. Take on balances. These ones are when you are starting, like you are starting to use information for the first time. So I want to do that. We'll take a break. Then we can schedule to start at